All right, greetings all. So I want to look at the energy sector here because I think we're being set up for a bunch of pretty good trading opportunities here. So the first thing I want to look at is oil. So we've been following oil for years and years and years and years, which means we've been following this support down here around 67.30, going back to March of 23. All right. So we're talking about 2 years ago. So for 2 years, this 67.30 level has been support for oil. Now, a lot of times when something gets to support, it rallies. So that's what we're kind of looking for, I think, is some kind of a rally here. Now, if you don't trade oil, you could always buy the USO ETF, which tracks oil. But we could look at some of the stocks within the sectors as well, or within the sector as well, I should say. But support is this like large group of buyers, a lot of people that want to pay around the same price for new shares. And let me just make sure I have the right coordinates. 60. Okay. I'm going to change that. I think I just trued it up a little bit. So 66.15. So a lot of times when you get to support, some of the people that created the support, some of the buyers start to worry they're going to miss out. They think someone else might pay a higher price, and that's who the sellers are going to go to. So they make their bid higher, and other anxious buyers see that and they do the same thing. And you get this snowball effect. So rallying off of support is a common thing in the markets, and it's because you get, I guess we can call it buyer's anxiety. The reason why you get support at the level that had been support before is because of something different. This is seller's remorse. People sell at the bottom, and when the price goes higher, they're like, oh, I made a mistake. If I can, I'm going to buy my shares back. I would say like 66, 67 is the level to watch. So when we get back to that support level, if you get enough of these remorseful sellers placing buy orders, it creates support. So I'm looking at this, it's oversold. Let's see what I got here for, let's take a look at the relative strength index. Yeah, so definitely oversold. Not incredibly oversold because we went kind of sideways there. Now, the other thing we can look at is natural gas, which is also, to me, looks like it's setting up for a move higher. All right, so there's resistance up around 445 here. And notice how we got kind of not a perfect chart pattern, but it's good enough that it shows you the price action that we're looking for a move higher. This could be what we call the ascending triangle pattern. And what this shows us is that the sellers are willing to hang out up around 445 here, but the buyers, as time is going by, are paying higher and higher prices. This is why the bottoms are forming at a higher price than the prior bottom. We call that a higher low. So it looks like oil to me is set up for a reversal. It looks to me like natural gas is set up for a breakout. Now, if you're not a futures trader, you can get exposure to natural gas under the UNG ETF. All right. You could also buy the Boyle ETF, which is leveraged. It's going to move in about twice the same, or percentage wise, uh, two times the amount of oil roughly, or I'm sorry, natural gas roughly. And if you think it's going to reverse, and if it looks like it's going to reverse, we could certainly just jump on the other side. You got the coal ETF, which is designed to move in the opposite direction of natural gas by roughly twice as much. So, in other words, if natural gas goes down, this is going to go up. All right, a couple things. Saw it today. I was looking at Valero. Right? Could be getting kind of the old double bottom here. I don't really talk about double bottoms and triple bottoms a lot. And a lot of times people ask me why. And it's because we have more of a short term kind of a view here. And in order to get a double bottom or triple bottom confirmed, the neckline has to break. And that gives away a big part of the move. Like, for example, the neckline here would have been here for this if this was the double top. So you still got a substantial move down, but hopefully we would have caught this reversal way up here before it became your classic double top. But anyway, I thought this was kind of interesting. Double bottom here, potentially. So we could get to support. Those buyers could start to outbid each other So if oil reverses, then this is going to reverse. And Marathon Petroleum looks very similar. Yeah, look how similar these two stocks are. This is something to think about. Like if you want to buy this sector or this, I should say, industry or these stocks, if you buy both of them, you're not really diversified because they're going to trade pretty correlated to each other. It's almost hard to even tell the charts apart. Oh, wait, because we're not. All right, so that's Valero, and that's MPC. And of course, there's the XLE ETF, which tracks the energy sector. So if oil reverses, natural gas breaks out, there's going to be some upside here. But I'd probably go in on those names, Valero or Marathon. All right, anyway, so just to kind of rehash myself here, oil is at support. It looks like it's about to reverse. Natural gas is at resistance. It looks like it's about to break out. Now, of course, this could turn against us, but if it does, well, then we just get on the other side of the trade. It's important to be nimble. But there's going to be some definite opportunities to profit in this sector over the next few days. All right, everybody. I will see you soon. Thank you so much.